Hello folks, welcome to Pro Trader Strategies Market Commentary for Friday, May the 28th. I'm Eric Wilkinson. You very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, and how those come in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these market commentaries, but I'm also going to talk about the option strategies I implement into my portfolio based on the assumptions I come up with in those market analysis. We aren't just picking option strategies out of the hat. I don't look at a bullish assumption and immediately think a long call. No, what I do is I look at the internals. I look at the pricing. I determine if they're expensive or cheap because I'm a good steward of capital, as you should be too, and that determines the strategy. So check out our webinars. I go into detail how you can quickly spot what type of strategy you need for your given assumption, and then you can move forward. We're just turning the tables of probabilities in our favor by using some logic, and I show you how to do that, all right? So without further ado, let's get on with the economic data. Wait, one last thing. Before you go, smash that like button for me. It really does help me out. It really helps. So German importer prices, we're talking about inflation lately, right? Importer prices are going to give us some of that insight to that, but German importer prices coming in a little bit hotter than expected at 1.4%. French consumer spending negative 8.3, expected to be, they're still seeing some pandemic there. They're still seeing some lockdowns and that people aren't really getting out, but this was much worse than expected. Negative 8.3, expected to be negative 4.1. Dismal as far as I'm concerned. French consumer price index in line with expectations. GDP negative 0.1%, expected to be expected to be positive 0.4. Something to note with this consumer spending, that is not going to drive inflation very much, or should not be driving inflation necessarily, and we are still seeing some of those elevated consumer prices. I would have thought that would have come off a little bit, seeing that spending isn't happening. All right, moving over here to the United States, we got our core personal consumption expenditures. Keep in mind, this is kind of like the consumer price index, but basically they're stripping out institution, everybody else but you and I. This is the number that reflects how you and I are dealing with inflation, how inflation is affecting us is probably a better way to say that. So the core personal consumption expenditures, sorry about that, came in at 0.7%. It was expected to be 0.6%, so a little bit hotter than expected there, but something to note. This number, when it gets to 0.3, is high, at least for the past 20 years, and we just got a 0.7, folks. It usually is around, 0.2. 0.3 is high. All right, so you're getting the drift. We're over 3 times higher than what the average is or what the normal is, and basically doubled what the normal highs we see are. So this number is huge. One of the, I went back as far as I could. I think it was probably the last time this reading was that high was somewhere close to in the 80s. So that number just huge. I just can't get over how big that number is. All right, so let's move on to personal income coming in at negative 13.1, expected to be a negative 14. So nice to see that it was not as bad as expected there. Personal spending here in the United States unchanged, really, for the most part, and in line with expectations. They did revise last month's number up about 0.5%, so that's good. Preliminary wholesale inventories, slight uptick to 0.8, expected to be 0.7, but then they did revise last month's number by that 0.1%, so it's making up for the miss on the front line. Chicago PMI 75. Folks, I can't find anything higher than this number for the last 20-some years either. This number could be one of the highest readings ever. So Chicago PMI 75.2, expected to be 67.9. Really good numbers. Now, these are the numbers I was talking about, those manufacturing numbers, the Philly Fed, all of those Chicago purchasing managers. These are numbers we want to look at because they're forward-looking. Purchasing Managers Index is the gentlemen that are making the decisions for the company, looking at demand and projecting out what they need for the supplies. So really good number there. University of Michigan consumer sentiment coming in at 82.9, expected to be 83.1. Those are pretty dismal, folks. That's basically back to levels of 2013, and you know where we were in 2013. They started to look like we started creeping up, but it's just started to slide now again. So consumers not very confident for some reason, probably. You know, all this talk about taxes, I think, is probably the thing that's worrying consumers the most. That's the one thing that I can see. I mean, they're seeing the economies open up. Those things should be making the consumer a little bit more confident, but that's a bit of a disconnect there. All right, so University of Michigan inflation expectations. This is basically the monthly one, coming in at 4.6, and that is a massive number also. So today, pretty historic numbers coming out. The last time we saw these University of Michigan inflation expectations was basically back in 2011 during the financial crisis. So we are right back there right now. Even, you know, during the crisis for the pandemic, you know, we were seeing this hover right around 3.3. So another full percentage point and a half almost higher than that level there. All right, I've spoken a lot about data right now. Let's get on with the markets. Probably, I'm going to rip through these actually because there's nothing going on. Maybe a little bit of a topping pattern here in crude oil futures, as you can see, but unchanged on the day. Gold futures just slightly in negative territory, really not being able to see a whole lot here. Yeah, it looks like a topping pattern to me for the most part, but we are right there at the point of control. I'm not hating on not being in the 1900s. I think that real level is that 1923, and that goes back to the 2011 highs that I was just talking about from the pandemic when we saw those inflation expectations. Well, inflation expectations start jacking. Why aren't we seeing gold fly like these highs? That was during that same time frame. Then we got on to Bitcoin. It's coming off. Everybody is hating on Elon Musk across the board. Kimberly Clark and everybody else just saying, you know, everything was rosy until you started talking down on Saturday Night Live, Elon, and that's probably true. It really did. Kind of like what Portnoy did with Penn at the top at 142 when he started spouting off how much they were worth. You know, those are the watershed moments you need to look for in the markets when people start spouting off. It's usually a pretty good time for a reversal. CBOE, we can see the VIX is coming off here a little bit as the markets are in positive territory. I think the NASDAQ needs to get up another several hundred, 250 points, I think, from where we are right now to be positive on the month. Don't think that's going to happen. But I do think that, you know, we are going to probably see a newer high wave here in the equities as we are marching higher and higher every single day. It feels like it's a slow trudge, which is healthy, I believe. When we start getting the sector rotation and getting these bounces is good. Straight parabolic gets a little bit overdone quickly. All right, so we can see the Dow Jones Industrial Average moving nicely to the upside. E-mini S&Ps slightly higher. You can see overnight inventory pretty flat. Nothing to see here. We are extending the value area highs above the previous days, so that is acceptance of value higher, folks. That means that is a bullish pattern for those types of underlyings. All right. Let's get on with what I've done. Gilead, I talked about this yesterday, was looking to get out of it. The pattern set up, we started coming off. I pulled out of my order to get out at $4.25. It never really even got there, so I'm not hating on that so much. What I'm really hating on is the fact that we got this sell-off. I got into this trade right here on about the 18th. You can see volatility was coming out. I expected volatility to expand for me because with a bearish assumption, a quick pullback, I was expecting to see some volatility expansion. That's kind of the mantra of what we would normally see or what we would expect to see on a sell-off is usually volatility expanding. That being the case, in Gilead, I went in and bought the bought some puts on the 18th in, I bought the puts on the 18th, and I did the August, bought the 67.5 puts in there for $2.96. I got out today for $3.90. Probably got I could have gotten out about 35 cents better yesterday maybe. But again, I thought it looked like a continuation pattern. We've been talking about these type of dojis setting up right next to each other several times. And yesterday we got below the 50-day simple moving average. I am still confident in my decisions through and through on this trade, folks. I mean, I set it up like I would plan. Expect volatility to start rising as the underlying goes in there. That's what we do with, if we're buying puts or buying calls, we want volatility to expand. Now, I got the move in my favor. The thing that kind of hurt me here was the fact that the volatility came out even on a sell-off there. And as you can see today, volatility starting to come out again. So out of this trade, it looks like we might start parking here right around $65.50 or $66.50 where we are right now. Somewhere right around there. That's the value area. That's where price and volume's been accepted. So that is really where value is. I think that we could park it there for a little while. And with long puts and theta decay, they don't mix well. So take my winning trade and run with it. And then the other thing that I did today was adding Pepsi. I talked about this trade in yesterday's webinar on the long put spread. So with that being said, on Pepsi, I got a little bit of a bounce. Yesterday's move, market action, hitting that Fibonacci. We got those tweezer tops. That is a pretty good sign that we are going to roll over. So the probabilities are in my favor. Generally speaking, you get these tweezer tops, you're going to get a little bit of a correction. I'm expecting it to correct down to around 144 in this trade. But so I went in and did the Pepsi August, and I bought the 150 puts in there and sold the 135 puts for right around $4.82. That's exactly what it was. I was going to say right around $5. And so I'm setting this up according to those guidelines that I did in the webinar yesterday. I have two different scenarios that you can do for the long put spread. They both have their place in when and where you would use them. So please check those out. There's a little bit different on the strike locations as what we would use here. In this particular case, I went in there and did right around that 50 delta put that I was buying on those 150 puts, right? Those were right around a 50 delta, and then sold the 135s. Total debit of $4.82. So I'm risking that $4.82 to make a total of $10.18. Now, how did I come to that number? Well, if I'm long the 150 puts, then the market goes down to 135. That's $15. That's how much money you would make from 150 to 135, that $15. Well, I paid $4.82. So I have to subtract that out of the width of that spread. That being said, what's left is my max profit. So my max profit on this is right around $10.18. All right, I'm going to look to get out when this doubles. So right around $10 is looking where I would look to get out of this trade on a winner. For a loser, I'm going to be looking to pull the ripcord on this trade if we break above 148. We've tested it and failed. If we go up there and test it again, we used to say third time through. Well, you can see 1, 2, it would be third time. I would expect it to go through. If we really start pushing settlement above there, I'm out. Or it looks like it settles there. I'm going to be looking to get out. And I'm continuing to try and get out of my XLU on this trade. I just have a GTC working order to get out for a nickel. Got close yesterday, but didn't quite get there. I think the low was 6 cents. And I have on the June 68 calls in there that I sold, for 39 cents. I'm trying to get out for 5 cents. Last I checked, it was trading around 7 and a half, something like that. 6, 7.5, somewhere. I think the low trade I saw was 7. So, working to get out of XLU, Gilead, booked for a profit. Remember, I bought those puts, got the pullback, Volatility hurt me a little bit, but I'm not hating on it. I set it up. We pulled back. I would expect for the next 50 times I do something like that, if it pulled back, we would see volatility expand. So a bit of an anomaly there. And finally, the Pepsi looking for those tweezer tops to hold, and we get a little bit of pullback down to 144 in Pepsi. That's all I got. I hope everybody has a great Memorial Day weekend. Please go out there and thank any servicemen you see, men and women, as they do a lot and they go through a lot. Believe me, I come from a military family and I have seen it. So please give them a thank you. And finally, please smash that like button for me. And if you can't smash that, take that. Have a good one. Take care and take it easy.